All right, traders, welcome back. We're diving deep today, specifically for those of you who live and breathe the forex markets.
That's right. We're going to be focusing on a period that often throws a wrench in the best-laid trading plans, that December-January transition.
It could be a wild ride, with the holidays coming up, thinner trading volumes, year-end portfolio shuffles.
Yeah.
And, the ever-present tax man.
Exactly. It's a unique beast, and we're here to help you navigate it. So, let's start by dissecting December, shall we?
Yeah, that's good to me. Let's unpack it. I mean, one thing that always jumps out at me about December is the lack of major economic data releases.
You're right. That does make the market hypersensitive. One little whisper of news can cause some pretty big swings.
So what are some practical steps, some smart moves that traders can take to capitalize on this, this kind of December-specific environment?
Well, one thing that often gets overlooked, even by experienced traders, is a strategy called gain-loss harvesting.
Okay, so gain-loss harvesting. I'm intrigued. Break that down for me.
So imagine you've got a winning position on, let's say, USD. Things are looking good, you're feeling pretty confident. But at the same time, maybe you've got a losing trade open on GBP/JPY.
Oof, yeah, we've all been there. Those losing trades can sting.
They sure can. But here's the trick. By strategically closing both of these positions before the year ends, you can actually offset those gains from your USD win with the losses from that GBP/JPY trade.
Ah, I see where you're going with this.
And bam! You've just potentially saved yourself a nice chunk of change on your tax bill. It's all about being tax savvy.
That is a brilliant play. Definitely something for our listeners to consider as we head into the final stretch of the year. But let's shift gears a bit. Beyond those tax maneuvers, how can technical analysis guide us through this December volatility?
Well, let's take a look at the USD index, for instance. Let's say it's been stuck in this range-bound pattern for months. Sideways action, not much excitement. But then suddenly we see a decisive break. It could be a break above a key resistance level or below a major support level.
Okay, and what does that tell us?
That, my friend, could be a signal, a strong signal, that a major trend shift is brewing heading into the new year.
Interesting. So those breakouts, those are the things to really watch for. Okay, now switching to a specific pair here. What about EUR/USD? What should traders have on their radar for this one?
With USD, central bank policy is absolutely crucial, especially pronouncements from the Federal Reserve. If the Fed starts talking hawkish, signaling they're going to hike rates more aggressively than expected, well, that could send the US dollar soaring.
And of course, that would impact USD.
Yeah.
That makes sense. But it's not just about what they say, right?
Correct.
We also need to look at the economic data coming out.
You got it. You want to be correlating those economic indicators, things like inflation data or employment numbers, with the actual price action you're seeing in USD. That's how you confirm those technical signals. That's how you know if the move has legs.
All right, so we've talked about the USD index, EUR/USD, but let's not forget about a whole other world of opportunities emerging markets. And those can be particularly volatile, especially in a period like December, wouldn't you say?
Oh, absolutely. They can be a real wild card. You've got the Brazilian real, for example. Brazil's economy is very closely tied to commodity prices. So any shifts in global demand, any fluctuations in those prices will impact the BRL.
So if you're trading BRL, you've got to have your finger on the pulse of the global commodity markets. Makes sense. And what about the Turkish lira?
The lira is another interesting one. You've got to factor in the political landscape there. Political uncertainty, those can really add fuel to the fire in terms of currency volatility.
So it's not just about charts and technicals. You've got to understand the underlying political and economic factors that are driving these currencies, especially in emerging markets.
All right, so we've covered a lot of ground with December. Let's move into January. Now, you mentioned the Santa Claus rally earlier. I'm curious, does this actually have any bearing on the forex market, or is that more of a stock market phenomenon?
That's a great question. Well, historically speaking, we do tend to see an increased risk appetite across the markets during the holiday season. And that can spill over into the forex world.
Okay, so it's not just confined to stocks. Interesting. So what could that look like in forex?
Well, for example, it could translate into a temporary weakening of the US dollar. As investors diversify into those riskier assets, including emerging market currencies, looking for those potential holiday gains.
Got it. So even if it's not a guaranteed rally, it's definitely a factor that forex traders should be aware of. Now, let's talk about that overall market reset that happens in January. How can traders use that to their advantage to set themselves up for a successful year? January is a fantastic opportunity to step back, take stock, and reevaluate your entire trading approach.
Okay, break that down for me.
For starters, think about your risk tolerance. Has it changed? Maybe you need to adjust your portfolio weighting, allocate more to certain currencies, less to others, or maybe you've been wanting to experiment with a new trading strategy. January is the perfect time to put that into action.
It's almost like a fresh start. It's like hitting the reset button on your trading.
Exactly. January often sets the tone for the entire year, so it's crucial to make sure your approach is aligned with your goals and your risk appetite. And speaking of that, you mentioned earlier the importance of psychological discipline.
I did. And, that's something I wanted to circle back to because I think it's especially relevant during this December-January period. Things can get so hectic with the holidays, with the end of the year pressure. It's easy to let emotions get the better of you.
Oh, I completely agree. It's so easy to get caught up in the frenzy and make impulsive decisions. But one of the best pieces of advice I can give, especially during this time, is to stick to your trading plan.
Your plan. Yeah, that's crucial.
Don't let those holiday highs or those end-of-year lows cloud your judgment. Write it down, stick to it. Remember, trading is a marathon, not a sprint.
Absolutely. Words to live by, especially for us forex traders. Now, before we wrap up, I want to touch on those emerging market opportunities once more. You mentioned the Brazilian real, the Turkish lira, but what about the Indian rupee? What makes it stand out from the crowd?
Well, India's economy is a force to be reckoned with, and the rupee has actually demonstrated some impressive stability compared to other emerging market currencies. That being said, you always have to be mindful of those political and geopolitical risks that can pop up.
All right, so to bring it all home, what are some of the key takeaways for our listeners as they navigate this December-January transition in the forex market?
I'd say in December, your primary focus should be risk management. Really batten down the hatches, tighten those stop-loss orders, reduce your position sizes, and really focus on those high-probability trades. Don't get caught chasing the market.
Don't get greedy.
Exactly. And then when January rolls around, that's the time to reassess your strategy, recalibrate your risk, and really hone in on those potential opportunities that emerge. And always, always remember to keep an eye on the bigger picture, the macroeconomic and geopolitical landscape. That context is everything.
Brilliant advice. And just a reminder to our listeners, today's deep dive is just the starting point. To really master this period, you need to do your own homework. Dig deep into those economic indicators, scrutinize those charts, stay up to date on global events, and you'll be well on your way to trading success.
Couldn't have said it better myself. Do your research, folks.
All right, that's all the time we have for today. Until next time, happy trading, everyone.